Hey, welcome back to YT Finance, and today we will be addressing some bearish points regarding Nano Dimension stock, but I still stand by my NNDM stock price targets and predictions from my previous videos. I am simply just going to present the other side just to be fair. Next, we will talk about Bionanogenomics stock and how BNGO stock is holding up in this current market environment. Then, towards the end of the video, I will give you two other great genomic stocks to look into so you can catch the major growth that will take place in the genomics industry. This video may be different from other videos that I have posted in the past because I am having extreme technical difficulties right now, and it's a miracle that I can even make this video. So go smash the like button right now for NNDM stock, comment down below your thoughts on BNGO stock, subscribe if you are new, and let's get right into our first story. Nano Dimension, ticker symbol NNDM, is a 3D printing company that produces high-end and high-performance electronic devices, which is a very niche market. The author of this article thinks that Nano Dimension is a fundamentally troubled company, and even though they have loads of money on their balance sheet, he says that has not changed the company's underlying fundamentals. NNDM stock has been extremely volatile lately, and the author argues that for most of 2020, Nano Dimension stock was worth around $2 to $3. But when shares broke above the $8 price point, then investors really started to pay attention. The author goes on to say that Nano Dimension is solely reliant on their 3D printing machines along with their ink and software sales. But that is a no-brainer. Of course, Nano Dimension relies on their technology to make them money. I do not see a problem here at all, especially since they have recently adopted the razor to razor blade reoccurring revenue model. The author goes on to say Nano Dimension had poor revenues last year, which was twice as low as the year before, and that they used the illness as an excuse for their low revenues. I would say that is a perfectly valid excuse to have low revenues, just like the many other companies who also got hit hard in regards to revenue due to the illness. The author then alludes to the fact that if Nano Dimension was actually hurt by the illness, then that they would have not hired more employees, which is false because they are still a growing company, so more talent and labor is always going to be needed even during the illness. In a previous video, I broke down Nano Dimension's financial report for the quarter and for the year, but this author only decides to pick the parts where Nano Dimension was the most negative, such as their operating loss and total loss. The author also says that the only reason NNDM stock rallied was because of their financing activities. However, if he is referring to the multiple stock offerings, then he may be mistaken here because that would discourage people from buying NNDM stock, not encourage them, because that actually dilutes the stock price, which is bad for their investors. After this blatant falsehood, he goes on to say that it is no surprise that Nano Dimension is looking for an acquisition so they can justify all of the money it took from their investors. But let's see what Nano Dimension's CEO has to say about this, and I quote, "We are now focusing on two kinds of acquisition targets. One will dramatically expand our go-to-market channels and give us exposure to vertical markets, while the other targets include a set of companies that have transformative technologies and products which are complementary to our own product roadmap." The author persists that the rise of NNDM stock has nothing to do with any improvements or catalysts regarding the company's plan, business model, or fundamentals. He also thinks that Nano Dimension is using the acquisition so it can grow its current business, and I would say he's right in that regard. Nano Dimension is growing its business through an acquisition, and they are going to use their acquired companies to spur growth in NNDM stock and in the general company, and I don't see anything wrong with that. I don't even see something that's remotely bad about that. Nano Dimension will have multiple acquisitions and potential mergers over time, and I expect that the NNDM stock price will react very positively to a couple of these, especially the first one to be announced. But we have to remember that even if the NNDM stock price spikes from acquisition news, it will likely come back down, so please be careful. For Bionanogenomics stock news, we had Oppenheimer reduce their earnings estimate for BNGO stock from a 4-cent loss per share to a 5-cent loss per share. However, Oppenheimer still has a buy rating for Bionanogenomics stock. BNGO does currently have a negative return on equity and a negative net margin, but with the genomics market picking up steam, we might see more positive results as we move toward 2023 and even into 2024. I think the ARKG ETF is one of the best ways to invest in the genomics sector because it incorporates a multitude of great genomic stocks instead of putting all of your money into one stock like BNGO. So it is definitely a lot safer to invest into ETFs than it is in individual stocks. But I still like BNGO stock and I will continue to hold it. Now let's take a quick look at some of Bionanogenomics ratios, which can tell us a lot about a company. Now you don't need to know what these ratios are, I will just tell you and let you know if they're good or bad. BNGO's PE ratio is not good, the beta ratio is too high, the current ratio is basically fine, the quick ratio is fine, and the debt to equity ratio is good. Because of this, many hedge funds are buying up BNGO stock. For example, 5 hedge funds have recently bought $74,000, $30,000, $66,000, $1.1 million, and lastly $167,000 of BNGO stock respectively. Overall, hedge funds and institutional investors make up around 5.64% of the overall purchased Bionanogenomics shares. Some other great genomic stocks are Illumina and PacBio. Specifically, Illumina is one of the top dogs in the genomics market thanks to their gene sequencing technology. They have reliable streams of revenue and they are comfortably profitable. They are also set to experience significant growth over the long term, while also being a relatively safe investment option for individuals and investors who want to enter into the genomic space. Now, besides BNGO, the next genomics play, which is much more risky than Illumina, is named Fulgent Genetics, ticker symbol FLGT. This company is a diagnostics company that also does genomic testing. Their main claim to fame was due to the illness, in which they were quick to react and respond, which allowed the CDC to award them a contract for population-level sequencing so they can track any new viruses and strains that might come to be. But even without the illness-related business, Fulgent increased their revenue by 43%. However, we may have to wait longer to see how they do when the illness is nothing but a distant memory. Like this video right now, because I had to pull some strings just to get this uploaded. Hopefully by Monday, the problems I am having will be fixed. Subscribe if you are new, and I will see all of you in the next YT video.